Hi everyone, welcome to Value. So today we're looking into a SoundHound AI. Now this stock is really moving. It's up 28% and for good reason, because this stock is really slowly proving itself. Like, of course, the financials have a slight mismatch, but if you look at their forward projections, it slightly is justified going forward. So today they signed a deal with Touchy's Tacos, and basically they do voice AI for phone ordering. And if we go into further detail, basically this voice AI ordering capability manages 100% of incoming calls. So to say 100% of incoming calls is pretty big. To rely on an AI system to answer all your calls, that's massive stuff. It means this AI is very capable of handling it in order to give it 100% of incoming calls. So it includes multiple calls and orders simultaneously. It not only takes food orders but also answers common questions about menu items, specials, store hours, and allergy information. So you kind of get the idea that this stock is really touching a base here, particularly in the food area, and the market's really recognizing it. So this contract, in a sense, it isn't a massive contract. It's a big contract, but it's not the one that kind of just changes the company entirely. I mean, it really starts to add to that momentum, but it doesn't change the company in terms of financially, but it does, it signals strength. So as it says here, the company's voice AI solutions are already deployed in over 10,000 restaurant locations. So like with phone, drive-through, kiosks, headset, and other devices. So there you go. Like there's over 10,000 restaurants that already have this kind of system, and currently Touchy's Tacos only adds about 130. So why is this all important? Because all of a sudden it's like 100% of those ordering systems. So if we touch base onto their financials, it's like an initial look, you kind of feel like, why? Like, how is the valuation justified? So if we look at the valuation, current valuation's about $4.8 billion after, a 27% jump today. So in a way, it slightly puts it in like this premium category. But like the company is growing quick at the same time, so the market kind of starts to recognize that as well. So through our third quarter revenue, it was up over $25 million, which is over around about 89% revenue growth, which is a really good growth number. Obviously the revenues are small compared to the valuation, but this is for a quarter. If we jump to the guidance, then it starts to make more sense. Like if we look at the business outlook, their range for 2024 is $82 to $85 million, and then for the full year 2025, their outlook is around $155 million to $175 million, which is a pretty big jump. So these guys do kind of forecast that they'll get close to nearly doubling their current revenue, if not doubling. So that's a really good sign. And how do they know that they're going to reach these numbers? Because who knows that they're going to double the revenue? Well, because they've signed a lot of contracts. Like they've signed a lot of contracts with a lot of different companies, and the rollout is slowly coming along, so that next year they already know how much of a rollout they're going to do, to the very least. So basically those revenue numbers are more or less, they should at least hit those targets, if not exceed those targets, if they kind of catch onto the market at even quicker speed. So we don't know yet entirely how they'll perform next year, but based on their guidance, they're going to do very well. So there's further updates into their business highlights. So they have been expanding into major financial, healthcare, insurance, retail, telecom, hospitality, and travel institutions globally. So yeah, like these guys are basically replacing anyone that answers calls, which is pretty awesome, like in terms of value that it can offer these companies. It's going to, like it's a massive company that's going to really disrupt. Like it's a massive technology. That's what I sort of mean. Like it's going to disrupt so many things, particularly the food industry in terms of answering calls. Like imagine replacing that many people in terms of answering calls, and then you start to get into more, like healthcare, insurance, answering general calls. And then after that, you have them having this working as like a call center, kind of replacing a lot of, positions in that area as well. So you can start to imagine the value this company starts to generate. So currently they are signed with 7 of the top quick service restaurant brands globally. So if they've signed on to that many fast food restaurants around the world, then obviously that rollout is going to continue at a really, really good rate. Currently, they're in 10,000 locations around the world, and they continue to expand. You can just see this company slowly taking over. Like once you're in there, it's hard for other companies to dislodge them in the future. And I found their niche. These guys are really good at this type of stuff, and they continue to improve it. So that's when you start to have kind of comparisons, like with companies like OpenAI. So OpenAI, they reported revenue of something like $3.7 billion, and the reported valuation is around about $157 billion. So that's roughly a 42 multiple on revenues. So if we look at SoundHound, currently it's trading at $4.8 billion. And if we applied 42 times multiple to basically their current guidance, then you'd get about $3.5 billion, which is, in that and within that range in a sense. If not for today's jump, it would have been in that range. But with today's jump, the market kind of signals that it's already projecting things into the future, particularly with the current forecast. And if we do 42 times multiple for the future revenues, which is next year of say like 100, that mid-range, say like $165 million, then we start getting closer to a $7 billion valuation. So at a $7 billion valuation, we're basically seeing a 50% upside on today's pricing. So the question is, if you could earn 50% by the end of next year or middle of next year, would you take it? Would that be an appealing kind of proposition for you to hold a stock for up to 12 months? Like, it's much better than a term deposit, of course. So like that's kind of like your justification why you would invest in such a company, because literally they are in a category where it's growing quick. And once you cement yourself in that kind of like situation, it's hard to dislodge this unless they're really bad or the pricing is really expensive and the other competitors are much cheaper. Then it'll be hard to dislodge this company in the future. So it's definitely something that you look into in terms of, how competitive is this company? How hard is it going to be to replace? And it's going to be really difficult. So once they're in there, and they're proving the technology is good. That's why Touchy Tacos is taking them on 100%. And this is why this company is definitely worth looking at, because it's got a great future. Valuation is slightly higher than anyone would like at this current stage, but it's still pretty reasonable because they're generating revenue, and the guidance next year really signals scale. So then looks like a really good stock going forward. If you've got any comments or questions, post below. Until then, good luck investing, everyone.